Yeah, I mean, I definitely think the China trade discussion is going to be front and center, especially for the market. You see how the market's moving on the positive notes that we're getting out of the NAFTA talks. And you also saw last week the market moved over 400 points higher on the Dow when news came out that the U.S. was going to talk with China. So, and nothing came out of those talks. And if these $200 billion in tariffs go into effect in September, then we're going to have a major problem. Though the way we are still positioning, though, is for a cyclical second half to do really well. We got tech. We think they're going to continue to lead the way. You've seen them picked up after second quarter earnings, where some of the big FANG stocks kind of stumbled, but the rest of the tech sector was able to make up for that. We think that to the extent that semis can pick up here, that they'll be able to continue to drag that sector higher.
Scott, how do you assess the risk reward in terms of the China tariffs? It seems like tariffs have been viewed by the markets as sort of an annoyance, but it's something that we've been able to live with as we march to record highs. If that next round of tariffs on $200 billion worth of goods from China goes into effect, does that impede the market's ability to go higher? Whereas if there is progress, some sort of surprise meeting announced before the midterm elections, maybe the markets goes higher. I mean, how do you think about that?
This situation reminds me of the old adage that on Wall Street and perhaps in life as well, whereas the most anticipated risk is least dangerous, the least anticipated risk is most dangerous. And I think the threat of a trade disruption falls squarely into that category of most anticipated risk. Does it pose a threat to market sentiment on a day or two? There's no question. But when you back up and look at the underlying supports of market activity, how strong personal consumption is, we saw the consumer confidence numbers yesterday, how strong corporate earnings are. If I can use a late summer metaphor, that's the tide coming in. Trade may be the waves crashing on the shore, but the fundamental tide is still coming
So
in.
what is the least anticipated risk that may be the most dangerous?
Tyler, the two things that I'm watching, and it actually relates to trade, one of which is the potential for trade or tariffs to begin to increase consumer prices to such a degree that it forces the Fed's hand to raise interest rates more rapidly than they otherwise would. Not an expectation, and probably not even a 2018 risk, but as we get into 2019, that's a risk worth watching. And I think the other risk worth watching is the degree to which even the uncertainty around trade and tariffs causes companies to scale back hiring plans or expansion plans. No evidence of that yet. We'll listen for that in the third quarter earnings reports. But those are two risks that could derail.
Both trade derivative, though.
Both trade derivative.